Ladies and gentlemen, we continue to see the hemorrhage of Bitcoin, and now gold and silver continue its decline again, and the rest of the crypto world is not doing well as well. Now, I think if all this contained within that world is fine, but it's not. There's a potential of it now spilling over to stocks and shares, and let's just watch on and see what I mean by that. So I've entitled this talk called the Crypto Contagion, in the sense that whatever is happening in the crypto world could now spill over to mainstream stocks and shares. And this is not my analysis, this is someone else, which is more famous than I am. First of all, crypto has gone down very significantly from the high of $126,000 is now at $71,000 plus minus. It's going up and down. But you can see the plunge is massive, 40% plunge, and I'm not so sure whether it will continue to plunge for more. And I know of many speculators now burn very badly. Gold and silver, I thought it recovered. Now it came down again. So gold is right now going down again, and silver has gone down another massive 7%. And I'm not so sure where we are seeing the end of the hemorrhage of gold and silver. So it has lost its value as a good store of value in that sense. And by the way, crypto was all the while pitched as the alternative to fiat currency, and gold is, in fact, it's called digital gold. I don't think so anymore, in the sense that it's not stable. Now, I'm not saying that this thing will go down forever. I'm not saying that you could go down to zero, although the risk is there. But what I'm trying to say is that there is no way to evaluate what value it could go down to. So, as a summary, let me just say that Bitcoin clearly has gone down, and the reason why is something that the US Treasury Scott Bessent has just said, and I'll talk about it. Now, Michael Burry has some warning to give, and I'll talk about it. And now, last is what are the things that we should watch out for. First of all, why this digital gold narrative has now failed is because Bitcoin right now don't behave like a store of value. It's now behaving like a speculative asset. So this nonsense about it becoming the alternative to fiat currency, gold, and all this is absolute nonsense. I'm not saying it's totally worthless. Okay, I'm just saying that yes, it doesn't behave like an alternative to a store of value from fiat currency. And I think it is something that a lot of speculators got burned very badly. US Treasury Scott Bessent actually said that the Treasury Department does not have the mandate nor the inclination to tell private banks to bail out crypto asset or provide a backstop for speculative volatility. He basically tell everyone the US government will not bail out crypto losses. That's a very firm stance, and there's a lot of people who say that, oh, the Trump administration is very pro crypto and all this. This is the first time I hear a not so pro crypto comment. So now, basically, it's a clear signal that there will be no safety net from the US government. And if there's a need to self-correct, the market will self-correct. And if they need to take losses, the market will take losses. The US government will not give a damn. Michael Burry, the infamous person who called out the 2007, 2008 Lehman Brothers housing crisis, and he now turned his attention to crypto. He basically says that the crypto losses could lead to a death spiral. Okay, and let me explain to everybody what he means. So first, there's a crypto price drop. Okay, we are experiencing it right now. Crypto price drop, and this crypto price drop will weaken the balance sheet of mainstream companies and also crypto companies and crypto investors. And as a result, there'll be more forced selling, okay, and there'll be margin calls. And as a result, some of these companies will go into technical insolvency when their balance sheet falls below a certain level. And this is what he's calling out. And many of people think that this won't happen. Well, there are a lot of companies that are holding a lot of crypto coins right now, and they are suffering huge losses. Company called MicroStrategy is the epicenter of risk. He has got $4 billion of Bitcoin link obligations, and it has made use of debt to convert a convertible debt to accumulate Bitcoin holdings. And if the Bitcoin prices continue to fall, you erase the net asset value of the company. And as a result, the company could go down easily. Now, there are a lot of Bitcoin miners, okay? And I won't go to the technical details of it, but the Bitcoin miners use a lot of electricity, a lot of power, server, and all this. And right now, if the Bitcoin miners experience a Bitcoin fall below $50,000, they will suffer huge losses and they will basically stop mining. So there are a couple of companies in this field, and right now they are being forced and squeezed by these falling prices. Interestingly, there's a lot of Tesla investors in our community. Now, Tesla holds a very large position in Bitcoin. Now, it is small relative to the total cash position, but certainly if Bitcoin were to crash in a big way, then they have to take some impairment losses, and that wouldn't be very good for Tesla. Now, there are other companies as well in such situation where they hold large position of Bitcoin, basically speculating on Bitcoin's growth. And if this were to crash, then good luck to many of these mainstream companies. So as a result, what we are afraid of is that there's a contagion effect from all this crypto world to mainstream companies, because a lot of mainstream companies hold large crypto positions. And that's the fear that we have. We don't know how big this thing is. We know anecdotally some of these companies have, but if we have a situation where many of them hold large position, you'll be like Lehman Brothers over again. Many of the financial institution, if they hold large position of crypto asset, and those crypto asset fall below a certain mark, you'll be like basically those days where they hold large amount of uh, CDO, right? And I don't think I like to see that happening. I don't know how big this problem is, but Michael Burry is calling out for this risk. This mainstream contagion risk will happen if the crypto world continue to fall in a massive way, and it's discovered that a lot of the mainstream companies hold large positions of crypto and Bitcoin and so on. Then there'll be a lot of forced selling, and as a result, we will see a massive price crash. We don't know whether this will happen, but someone is calling out that this is a possibility. Well, in conclusion, I just want to say that this is not about a crypto story per se. This is about the whole financial market, and now crypto as it emerges to be a increasingly attention giving asset, and more companies like to see it because they believe that crypto could go to 126,000 again, and it could go to 200,000. Some even say that it could go to $500,000 and so on. I don't know, right? Bitcoin is something that we have no idea how it will go to, because there's no easy way to calculate the value. And what we really fear is that this would have a contagion effect. But what should investors like us do? Well, the key takeaway is this, guys. For individual investors like us, there is no need to hold highly speculative assets like this. Okay. And I just gave someone an advice because he's holding a lot of Bitcoin and he sees his value coming down phenomenally. He do dollar cost averaging, and more he dollar cost average on a falling asset, the more he lose money. And that's why I say cost averaging is not an easy strategy to execute, even for whatever, whether it be Bitcoin or an S&P fund or whatsoever. But let's go back to this one. I'll just say this: for people who are in their 40s, 50s, or 60s, or even 70s, you must be mad to hold highly speculative asset. So I told the guy in Chinese, all right, I said, you know, 不要拿需要的钱来追不需要的钱. Now, a lot of people are greedy, so they use money that they need to chase for money that they don't need. Now, the safest place you can put is in your CPF. Okay, it's a must put. It's a must put, and go beef it up to full. Okay, to your, if you're below 55, so make sure your MediSave account is up to the basic healthcare sum of $79,000. If you're you're below 55, so make sure your special account is brief all the way up to $220,000 with your full retirement sum. And if you are 55 years old and above, your retirement account opens up. Go flush your retirement account to full, okay, all the way up to the ERS. You will do very, very well when you retire with an insanely high amount of retirement income all the way till you meet your maker. So as for crypto, well, guys, it's for those people who has got spare cash to lose, and they are very speculative in nature. Let them go and touch it. As far as I'm concerned, for me and many of you guys, I don't think we need to touch it. Okay, please do not lose money on this asset. The stock may go, this counter may go up, these assets may go up, but it doesn't mean that you will make money out of it. Okay, many of you will get burned. As for gold and silver, I'll just say this. I'm actually pro buying physical gold, physical gold, because it look nice, it feels good, and it's a store of value in the long run. But if you're buying gold as a believer that you will make money out of it in the short term and speculatively, I think you're also putting yourself into high risk, and I don't think we need to put ourselves into those risks. Well, this is Mr. Lu signing off from the airport. I'll see you back in Singapore. No live stream tonight because I'll be in the air. Bye bye.